Nike shares under pressure this morning. That Dow component reported better than expected profits, but there was some weak guidance for the current quarter and for fiscal 2025. That's been pressuring the stock, which is now down just over 6%. In the meantime, Lululemon shares are also sliding. Actually, they're getting punished pretty badly. On weak guidance and slowing growth in North America, that stock is down by 12.5% this morning. Joining us right now is an analyst who covers both stocks. Randy Konik is Jefferies lifestyle and growth platforms analyst. And Jefferies, Randy, it's pretty easy to look at this and say, okay, this is a sign of a slowing consumer. You are looking at these two different stocks as two different stories, though. You're downgrading Lululemon this morning, but you're maintaining what you see with Nike, where a little disappointing, but you think that they can make some improvement. Why don't you speak broadly about the consumer first, and then why you see this as two different stories?
Yeah, look, first of all, thanks for having me on. But look, the consumer, I think, is okay for now, but the consumer's more erratic. It's their shopping patterns are more episodic, and they're just becoming more price sensitive. So, you know, while the economy is okay for now, it's clear that under the covers, the consumer is just getting more difficult and more choppy. So as it relates to both Lululemon and Nike, I think there's two different problems here. First, with Lululemon, we didn't downgrade it today. We've had an underperform rating. I think we're the only sell rating on the street. And what we've seen as a concern for Lululemon is just lofty expectations that the street has built on the buy and sell side into perpetuity. You know, apparel companies don't last forever in terms of their brand momentum and brand heat. And what we had noticed with our work going back beyond a year is that competition was starting to rise in the athletic apparel space, particularly companies like Alo in the East Coast and Viore out on the West Coast. And, you know, with the rising competition, we thought what would happen is Lulu's great numbers wouldn't last forever. And we're starting to see that now. That's the Lululemon problem. As it relates to the Nike problem, I think what Nike's going through is an identity crisis in a way. They're making a lot of management changes, or they've had. They went through a restructuring. They've acknowledged that they need to improve their product innovation, which has been lacking. And this has been a movie that we've seen before with Nike. About a decade ago, when their product innovation pipeline stalled, Adidas took market share and they had to recover. We're seeing that movie play out again a decade later with Nike. So, you know, that's why we don't like both stocks. We have a hold rating on Nike. We reduced our price target from 110 to 100 this morning. And then with Lululemon, again, we've had a sell rating, or an underperform rating, I should say, on this company for a little while.
Your price target is $300. That is far below the $420 it's trading at today.
Yeah, look, the stock had a market cap before the print of $60 billion. You just brought up FedEx in your commentary. FedEx and Lululemon had the same market cap. Does that really make sense? I don't think so. So now the market cap of Lulu is about $52 billion. If you look at our price target of $300, it's a little over a $30 billion market cap for a company that generates about $10 billion of revenue. We've seen these movies before. When companies slow or brands slow, their multiples compress very dramatically. And a Lululemon is one of the most expensive stocks in all of consumer discretionary, and one of the most expensive stocks, ex-AI stocks, in the stock market. So we think the Lululemon downside is pretty substantial from here, and we think the downside to the stock has only just begun.
Look, management is saying things like the international expansion is going to help. They're also talking just about how they think more color is going to help bring the consumer back in. I'd love to dig deeper into it, but we're almost out of time, and Nike's a Dow component. Let's talk about the China factor there. That's pretty important. China was better than some people had been anticipating.
Look, for Nike, China was fine. It was up about 6% on a constant currency basis. And China's not really the issue for Nike. What the issue for Nike is going to be is how the North American market plays. Because remember, from a China perspective, China's about 17% of revenues for Nike. The majority of the business is Europe and North America for the company. And if Nike can't get its act together from an innovation perspective, now they're talking about improving that innovation going forward, but if it doesn't work, they're going to continue to have stalling revenue growth or revenue declines, for that matter, in the next few quarters. That's why we have a hold rating on Nike.
good to have a hold. What happened to it? I mean,
say again?
It's good to have a hold. You're lucky you have a hold. What happened to it? I'm trying to get a 5-year chart up. You go woke, you go broke. Is that part of it with Nike?
I mean, look, you know how this works.
Look, is that yes or no?
I guess the answer is the market speaks, right? And you know what
I haven't
they've
bought
been
a
focused
Nike
on.
product in 5 years probably, and I won't.
Yeah, well, look,
draw your own conclusions. Maybe I
get it.
Maybe I don't like the treatment of dealing all that business in China with what happens to the Uyghurs. Maybe it's something that they've done around here, but I won't. I will not buy a Nike product, and I'm telling you that's part of what's going on there. That's part of what's going on there, Randy.
Yeah, I think it's a good point. I think the other issue is that other brands are taking market share. Think of the brand Hoka. Think of the brand On Running. These brands are up and coming. They're gaining little pieces of market share beyond the points you made that collectively are creating some issues for top line going forward or in the past for Nike. That's the issue going ahead here at this company.